So we are doing a sum of manufacturing accounts, which is of Feb-March 2023. Are you with me?
Yeah.
Feb-March 2023. It was the first question. If I see the A part, okay, it is a theory question.
Hmm.
Whenever there is a theory question, you really don't need to read the question. You can answer that yourself.
Okay.
So what's the first question?
Explain two reasons why a business may apply a rate of factory profit.
Okay. So can you tell me what is factory profit?
Factory profit is basically the difference that is there between the market price and the price that you made it for.
So that means it is a difference between the cost of production, that is the production cost of completed goods,
Yeah.
and the market price of the goods that you get it in the market.
Hmm.
So in between what you apply is the factory profit.
Yeah.
Why do you put this factory profit?
So that like you know how much profit you're earning.
Because of what?
Like because of the market price, you get to know how much profit you're
Market
earning.
price is the transfer price to the income statement.
Yeah.
So basically, when you're manufacturing the goods, okay, you need to know that because of manufacturing, you are earning something.
Yeah.
Okay, so it gives you a benchmark that at this price, so I can buy from external suppliers.
Yeah.
So if I am producing, I should earn something. So it will help you decide whether you have to buy from external suppliers or you have to continue producing.
Producing.
Okay.
Hmm.
Also, the manufacturing department will become accountable. When I say the manufacturing department will become accountable, that means they know that they also have to get some profit, because from outside at this much price we are getting definitely.
Hmm.
So if I want to continue my manufacturing department, I will definitely have to make some profit uh, for the business.
Hmm.
Only then my manufacturing can continue. Otherwise, the business will buy from external suppliers.
Yeah.
Okay. Come on, two reasons why you may apply a rate of profit.
So first is that it helps create a benchmark so that,
So,
so that the business gets to know whether or not it should continue producing the
so
goods.
the transfer price can be a benchmark for
Hmm.
which the price can be bought from external suppliers. 4 marks, okay? So
Okay.
this will give you 1 mark. So this information helps the business to make decision whether you could produce the goods or you can buy the goods from external suppliers.
Hmm.
So 1 and 1, two
Okay.
marks. Another 2 marks.
Hmm.
It gives responsibility for accounting in the business, because the manufacturing department is also treated as a center that can generate profits. If you do
Okay.
not give them that I get this from outside, I'm going to get it, so then they will never control their cost if they want to continue the manufacturing center.
Hmm.
So the manufacturing center is treated as profit center so that you can control the cost. So
Hmm.
these are the 2 points why you apply the rate of factory profit. You need to memorize it
Okay.
and then write it. I will wait for you. Now we start with the B part of the question, where they say prepare the provision for unrealized profit account, that is the pupa. You know very clearly, on the
Hmm.
credit side you will have the factory profit included in the opening inventory,
Yeah.
right?
Yeah.
On the debit side you will have the factory profit included in the
Closing event.
closing inventory. If the old, this is the old pupa and this would be the new pupa.
Mhm.
If the old minus new is positive,
Yeah.
then
Then it'll be on the debit side.
okay, if the old minus new is positive, then it is a gain or a loss.
On the old. Wait, it's a gain, so it'll be on the credit side.
So it will be a gain. So
Yeah.
profit or loss would be credit. So pupa would be debit.
Hmm.
Okay.
Yeah.
And if the old minus new is negative, then it is a loss for you. Profit or loss would be debit, so pupa would be credit. Yes,
Yeah.
let's go ahead. Read the question.
G Limited is a manufacturing business. It applies a rate of factory profit of 20%. The following information is available.
So factory profit is 20%.
Yeah.
That means you will follow this system PCCG. If it is 100, factory profit is
20.
20%. So your transfer price will be
80.
120%.
Oh, like add
Yeah, your transfer price will be 120, na?
20%. Yeah.
Okay, always. Come
Yeah.
on, read ahead.
The values are given, and then they've given finished goods inventory at 1st January 2022
So
at
you
transfer value.
have 1 minute wait.
Yeah.
You have sales, you have direct material, direct labor, factory overheads, admin expenses, selling and distribution, increase in the inventory. Okay, this will be increase in the direct material inventory, decrease in work in progress, increase in pupa. So you've been given the increase in pupa. That
Hmm.
means the old minus new is positive.
Yeah. So it'll be on
Old
the,
minus new is positive. That means it is a
it is on the credit side. It's a gain.
no. There is an increase in the new pupa, right?
Yeah.
When they say increase in the pupa, that means
It's a loss.
hmm,
Okay.
that means the old was less
Hmm.
and the
So,
new is more.
so pupa is provision for unrealized profit account.
Yeah. So
So if
there is
my
an increase in
unrealized,
pupa.
so my
Understand?
unrealized profit is more.
No, darling.
Hmm.
From the old provisions, the new provisions is 600 more.
Oh, okay. So then it's a loss.
So the new provisions is more. If
Hmm.
the new provision is more, that means the old minus new will be negative.
Negative. Yeah.
Old minus new is negative, that means it is a loss.
Yeah.
If it is a loss, then profit and loss will be debit.
Hmm.
Pupa will be credit.
Yeah.
So when I'm making the provision for unrealized profit account, for this increase in the pupa will be credit.
Yeah.
And I will write profit or loss.
Okay.
Are you with me?
Yeah.
Finished goods inventory on the first date at the transfer value was 26,400.
Hmm.
So on the first date, finished goods inventory is how much?
26,400.
So this 26,400 represents 120.
Yeah.
So how much would be the factory profit included in?
So you'll do 26,400 into 20 upon 120.
Yes, so you will do 26,400 into 20 upon 120. So
It is 4,400.
4,400.
Yeah.
So your opening pupa, the factory profit included in the opening inventory comes on which side?
On the credit side.
Factory profit included in the opening inventory would come on the credit side. So it is 4,400 and this would become your working note number 1. It is very important that you know these percentages.
Okay.
Now, nothing is given about the closing inventory, correct?
Yeah.
So I will close this account. I will make it 5,000. I will make it 5,000. What will I write? This is the balance closed down.
Yeah. 5,000.
5,000. This will become your balancing figure. And don't forget to write your balance begin down.
Hmm.
Are you with me?
Hmm.
Done?
Yeah, done.
Pupa is sorted, right?
Yeah.
We will go ahead. Now they have asked us to prepare a manufacturing account.
Hmm.
Factory profit is how much? 20%.
Yeah.
Okay. I have to prepare manufacturing account. So I will start. I know the format of my manufacturing account, correct?
Yeah.
Come on. First I'll do the markings. Purchase of direct material,
Come in raw material consumed.
raw material consumed,
Direct
direct labor,
factory overheads.
administrative expenses,
Income statement. Like other expenses.
other expenses, selling and distribution.
Other expenses.
Okay. Increase in direct material inventory.
Direct material may you
That
add it?
means opening was less,
Oh.
closing is more. So we do direct material consume is opening plus purchases
Minus.
minus closing.
Hmm.
So the closing is more by 1160.
So you'll minus it.
So increase in inventory is deducted. Increase in closing inventory
Is
is
deducted.
deducted.
Hmm.
Okay. So we will write this as our hints. You will write your hints at one place, please.
Okay.
Increase in closing inventory is deducted. Another thing, increase in pupa is loss.
Yeah.
Are you with me?
Yeah.
Decrease in work in progress. If increase in inventory is deducted,
And decrease will be
decrease
added.
in inventory would be added.
Hmm.
So in the cost of production plus the manufacturing cost.
Yeah.
Plus the manufacturing cost. And this pupa is dealt in the income statement, increase or decrease in pupa. It's not dealt over here.
Okay.
Okay.
Hmm.
Finished goods, opening inventory of finished goods. Is it dealt over here? This also is dealt in income statement.
Okay.
Yeah,
Yeah.
come on. Direct labor. Can you read this, please?
Yeah. The direct labor cost included $3,000 for workers repairing factory machinery.
So this has factory overheads included.
Hmm.
Your direct labor.
Has factory overhead included. So you'll minus it and add it to
So you
factory
will
overheads.
minus 3,000 over here,
Yeah.
and in the factory overheads,
You'll
you're
add.
going to add 3,000. Yes,
Yeah.
adjustment done. Next adjustment.
Next is office equipment cost $10,000, purchased in January 2022, was classified as factory machinery. Both office equipment and factory machinery had been depreciated at the rate of 10% per annum using the straight line method.
Okay. Tell me what will you do?
Okay. So first you bought
First,
equipment.
tell me what happened.
So you bought
There
inventory for
was this
10,000.
office equipment, okay?
Yeah, office equipment.
There was this office equipment.
Yeah.
Office equipment, that means it is used in the office.
Hmm.
But by mistake, you have classified it as factory machinery.
Hmm.
Okay.
Yeah.
Since you classified it as factory machinery, what you did is you took depreciation You took depreciation of this equipment.
Hmm.
How much?
10% per annum.
10% on straight line method, that means 1000.
1,000.
You took depreciation of this equipment 1000 in which overheads?
In factory.
In factory overheads.
Hmm.
Is this correct or it is incorrect?
Incorrect.
It is incorrect. Means what?
You'll add 1,000.
No, darling, it was office equipment.
Yeah.
You treated it as factory equipment.
Oh, so you'll minus it.
And you put depreciation in factory overheads,
Ha.
which is a total incorrect thing you did.
Yeah.
So
So
you
you'll
will
subtract
minus
1,000.
1000. This is wrongly done.
Yeah.
Okay, read the next thing.
Hmm. The next one is J Limited obtained a loan to buy a delivery van. The interest on the loan, $4,000, had been included in selling and distribution costs.
So is this anything to do with this?
I don't think so.
No. But if we have to make income statement,
You will
it is not a part of selling and distribution.
no, so you'll minus it. But
Hmm.
okay.
You will minus from here and it
Hmm.
will become which cost?
Finance cost because it's interest.
Because it is interest,
Hmm.
4000. Are you with me?
Yeah.
Now we start our manufacturing account. Manufacturing account comes with what?
First you start with raw material consumed.
Start, please.
Yeah, starting.
So first you will write your direct material consumed.
Yeah.
You don't have opening inventory of raw material,
Yeah, you don't.
but you have purchases of raw material.
Hmm.
216,000.
Yeah.
And there is increase in inventory.
You'll minus it, which is 214,840.
1160. So 214,840.
Yeah.
Then you have direct labor. How much is direct labor?
196,200.
Direct material, direct labor, direct expenses. No direct expenses, so this will become our prime costs.
But direct labor mein we have that the
Oh
direct
yeah.
labor cost. So you'll minus 3,000. So this 3,000 would be added to the income statement other expenses, no?
Hmm?
This 3,000 that we're minusing here, it will be added to the income income
It is
statement.
added to factory overheads, na?
Yeah. Oh, okay, yeah, it's added to factory overhead, huh?
So 408,040.
Hmm. That's the prime cost.
Add factory overheads.
Hmm.
So it is 85,000 plus 3,000
Yeah.
minus 1,000. Hmm?
Hmm.
This is what cost?
Manufacturing cost.
Increase in inventory is subtracted. Decrease in inventory is added.
Hmm.
Okay. Increase in inventory is subtracted, decrease is added, it works inversely.
Yeah.
Then in the
Then,
manufacturing cost, you add opening minus closing,
hmm,
but you have decrease in inventory, right? Work
yeah.
in progress.
So you will add it.
Then you have PCCG, that is production cost of completed goods,
Yeah.
or cost of goods manufactured, cost
Hmm.
of production. Then you will add factory profit.
Yeah.
You will get
Transfer to income statement.
factory profit is 20%.
Yeah. Hmm.
99,200.
Yeah.
So your transfer value is 595,200.
200.
This is the transfer value to your income statement.
Hmm.
Okay.
Yeah.
Now they've asked you to also prepare a statement of profit or loss.
Yeah, Miss, one second, just finishing this.
Are you with me,
Yeah.
or you want me to wait?
Just 1 second.
Now they want you to prepare income statement,
Hmm.
statement of profit or loss.
Yeah.
Are you with me?
Yeah.
So first we start with sales. 9,36,000. Then we minus the cost of sales. Yeah.
Yeah.
What does your cost of sales have?
The opening inventory of the
Of
finished
finished
goods.
goods.
So we'll get 26,400 only, na? Because like the including factory profit amount only.
Including the factory profit.
Okay.
This will always be a transfer value plus
The
the production
transfer.
cost of completed goods at transfer price
Yeah.
minus the
The,
closing inventory of finished goods.
hmm. The closing inventory, they haven't.
1 minute. So you will get gross profit on trading.
Hmm.
Come on. Opening inventory of finished goods is how much?
26,400.
What is the production cost of completed goods at transfer value?
595,200.
Now closing inventory of finished goods.
Hmm.
Okay, fine. You know your PCCG
Yeah.
plus your transfer profit, your
Yeah.
factory profit
Hmm.
gives you
The
your
value.
transfer price.
Yeah.
Okay. If PCCG is 100, yeah,
Yeah.
factory profit is 20.
Yeah.
So transfer price is 120.
20.
Are you with me?
Yeah.
You had made the pupa account.
Yeah.
In the pupa account, you had the factory profit included in closing inventory.
Hmm.
How much?
5,000.
So factory profit included in closing inventory was 5,000.
Oh, so you
So factory profit included in the closing inventory,
is 5,000.
5,000.
Hmm.
So you won the,
120.
yeah,
So you'll do 5,000 into 120 upon 20.
hmm,
Oh, okay. So 30,000.
30,000.
One sec, I'll write that. So you did PCCG plus factory profit is transfer value.
Hmm.
So 120 and 120. So we had transfer value, which no,
Hmm.
wait, we
We
had
had the factory
factory
profit
profit, which was
from the
5,000.
pupa.
Yeah. And then we calculated it using this. Okay.
So we have our gross profit on trading how much?
One sec.
344 400.
Hmm.
Then we add the gross profit on manufacturing.
So we'll add the factory profit to it, right?
Factory profit, this 99 200.
Yeah. And give you a total gross profit.
So our total gross profit is how much?
Okay. It's 443 600.
But have we earned the and this profit in the factory profit included in this?
No.
We have not earned the factory profit included in the closing inventory,
Yeah.
which is included in our total gross profit.
Hmm.
So we will have to remove the factory profit included in the closing inventory.
So we'll have to remove 5,000.
How much is the increase in pupa?
600.
This is very important.
Okay.
Either you remove it over here or you can show it as other expenses.
Okay.
Decrease in income and increase in expenses.
Hmm.
So this becomes 443,000. Now there is no other income. So you will subtract the other expenses. What are your other expenses?
First is administrative expenses.
Then,
Then there is distribution costs, selling and distribution costs.
then,
Then there is,
then you will get profit from operations.
yeah. Wait, we have to add this also, no?
Then you will minus the
The
finance
financial
costs.
costs after the profits from operations you minus it.
Then you will get profit for the year.
Hmm.
So what is your admin expenses?
Admin expenses is 234,000. Is there any adjustment for that?
Selling and distribution. No, we did all markings, right?
Yeah, but there is an adjustment for it. No,
For administration.
no, sorry. No, wait, this depreciation will come in admin only, no?
Depreciation. Yeah. Depreciation of factory.
Yeah, so 1,000 plus 2,340. So it's 235. Selling and distribution is 97,000.
Admin is how much?
235,000.
Selling and distribution.
97,000.
97 minus 40.
Oh yeah, minus 4,000 for the financial cost.
Total is how much?
So it's 93,000.
35,000 plus 93,000.
Hmm.
328.
Hmm.
Hmm. Hmm.
So it is 1,15,000.
Then
Then you have to minus the financial cost,
hmm.
which is 4,000. So it'll be 1,11,000.
Okay.
Yeah.
So 1,11,000. That
Hmm.
so we prepare the statement of profit or loss.
Yeah.
Now additional information. Please read this.
The sales manager of J Limited received a sales order at the value of $40,000 from a new customer in a country that J Limited has never traded with. The new order allows J Limited to earn the same gross profit margin, but an additional $9,500 transportation cost will be incurred. Advise the sales manager whether or not J Limited should accept the sales order. Justify your answer and support your answer with relevant calculations.
Hmm. Come on, tell me.
So first is so this is a 5 marker, no? So we'll have to write two advantage, two disadvantage, and
So first thing is he's going to get the same gross profit margin.
yeah,
Correct?
yeah.
Let's find out the gross profit margin. He's going to get the same gross profit margin. So let us find out the gross profit margin. What is the gross profit? 443,000
Three, yeah,
divided by
by 9,
36,000 into 100.
100. It's 47.33.
So the gross profit margin is 47.33%.
Yeah.
The gross profit margin is 47.33%. So his order is for how much?
His order is for $40,000.
His order is for $40,000.
Hmm.
So $40,000 is the order.
Yeah.
Gross profit is going to get is 47.33%.
Yeah.
So the gross profit he will earn is how much?
Yes, 40,000
40,000 into
into
47.33%. So gross profit earned will be
18,932.
$18,932. Okay. But he will spend.
But he
But
will
he
what?
will spend how much?
He will spend a additional 9,500.
For transport.
Yeah.
So he will earn how much?
He will earn 9,432.
So if I take the financial things into consideration, his gross profit margin is 47.33%.
Yeah.
He will earn 18,932, but he will spend 9,500. So he will
Hmm.
effectively earn how much?
940. No, 9.
9,432.
Yeah.
but you only get maximum 2 marks for and 2 marks against.
Yeah.
Okay. So
So this is
the
for
agreement
3
is
marks.
that it will increase the profit and it will increase the opportunity to expand the business.
Okay.
Yeah.
Yeah.
You either show calculations directly
Hmm.
or you write the agreement. It's okay.
Hmm.
But because they've told you it's more relevant calculations, that means they've kept 1 mark for calculation and 1 mark for this.
Hmm.
Disagreement. What is the disagreement?
Disagreement will be.
If you're entering into a new market
Hmm.
which you don't know about, if you're entering into a new market which you have no knowledge about, it is risky
Yeah.
for political reasons,
Yeah.
or also there may be some foreign exchange, foreign currency issues.
There can be additional costs also.
There would be increase in administration costs
Yeah.
because the office people have to manage that also.
Yeah.
What is your advice?
Hmm. That he should do it because in the long run it will help him gain a larger market share.
Yeah, done. So with this we complete 9706 Feb March 2023. Okay.
Yeah.
This is the first question that was asked in the paper of Feb March. Okay. Bye.
Hmm.